This year, the Federal Reserve has raised the interest rate to 3 times, and there are signs that they'll raise rates even more in the near future. The most recent hike, the federal funds rate, which is basically what banks charge one another for overnight loans, went up to 2.25%. So joining us now with more on what this means for you is local CPA Kimberly Washington. Good morning.
Good morning.
All right, so what's happening here? This is partly a sign, I guess, of a strong economy.
Right, due to inflation. So this is just one way to curb inflation and make certain it doesn't go too high. So that's why the rates haven't continued to rise.
All right, so that means basically the cost of money, meaning loans, is going up.
That means it's going up, and more importantly, that it will impact your bottom dollar. So your credit card payments may go up, your mortgage payments may go up. So we really have to be careful in these times.
People who are shopping for a mortgage,
yes.
I mean, if you're looking at an ARM, that's just, an adjustable rate mortgage, that seems like that would be crazy to look at an adjustable mortgage at this point.
Right. It really depends on your personal situation, especially if you're a person who actually have an ARM right now. You may want to look at a fixed mortgage rate and may just consider refinance that loan, because right now we're expected that the rates may go up also in 2019 and also in 2022 as well. And this may be a good time if you're thinking about buying a home. This may be the time to do it.
So what advice would you give somebody who's maybe got a little bit of credit on a number of cards? What should they be doing if they've got a balance?
Right. Pay it down. This might be a good idea to start paying it down. Just list out all of your credit cards and also list it out from the highest interest rate to the lowest interest rate, because you know that the highest interest rate is going to cost you more to carry that balance. You may also want to consider a 0% balance transfer too as well, so that way you can also reduce the amount of your credit card expenses at this time.
So maybe that's one of those times you get that offer in the mail that
yes.
says transfer. It might be something that you would
yes.
consider doing
yes,
at that point.
The whole key is right now you really want to pay close attention to who do you owe at this point.
And then pay them down, because you're paying, obviously, these rates can be a little in the stratosphere.
They could be, and they're variable, and so they really depend on the interest rates. And every time we have an increase, we also have an increase in payment too.
Yeah,
as well.
You'll hear economists say, "Oh, the real interest rate was 0, but you weren't paying 0."
That's correct. And so this is also a good time to check out your credit reports too. I would check out sites like annualcreditreport.com, download my report, and start reviewing it too as well. And also consider monitoring your credit score too as well, because as you pay it down, then also your credit scores may increase. So look at those different sites like Credit Sesame and all of those things.
Good advice as always.
Yes,
Kimberly
thank you
Washington.
so much.
Thank you. 746. Here's Shelby.
All right, thanks so much, John. And we are starting off again with this picture I want to show you from Cocodrie. Still some foggy conditions out there right now, and looking at those visibilities, we see that where the dense fog is, Hammond, Gonzales, Morgan City, Baton Rouge, those are the lowest visibility.